All right, so it is. Thank you, everyone, for coming. My name's Kimmy Androlonis. I'm Managing Director of Baltimore. Again, thank you so much for coming. So I am just here to say hello. Again, thank you for coming, and I'm going to hand the mic over here to George to get us started.
Wow. Hi, everybody. It's good to see everybody. I haven't seen quite a few of you in a long time, and looking forward to meeting some of the new faces. So welcome to Baltimore's second Thursday event. It seems to rain every time we do this, so I don't know if that's a good or bad sign, but we'll take it as a good sign. So what we're trying to do at Baltimore is reinvent ourselves. Things went a little dormant over the last couple years, and as we come back out under Greg and the team's leadership, we wanted to try to reach into the community and listen and figure out where there's gaps within our entrepreneurial ecosystem in Baltimore and what gaps could we fill, right? We don't want to duplicate or replicate efforts. There's some nice new platforms out there and a lot of people doing wonderful things like Upsurge and TEDCO's always there and all these great organizations. So we want these things to be really interactive. It's not about me and the panel bloviating up here, right? It's about listening to you. But I'm thrilled to have here tonight some dear friends from the venture community that I think can really help generate some good conversation. So first of all, I'm with Evergreen Advisors. We're a corporate advisory investment bank. Why is that important here? Well, recently, with one of our customers, Wexford Science and Technology, which was a large commercial developer across the country. They built Biopark, for example, here in Baltimore. We helped them design a strategic venture fund, and then they hired us and me to manage the fund. So we got a new fund in Baltimore. We're going to formally announce it here pretty soon. Yeah, we're excited. Wrote our first check in December to a company called Capsulomics, early cancer detection technology. And so we're prospecting, so we're looking for deals. We're market agnostic. We want to be very opportunistic. So I'm looking for business to invest in. So I've been in the ecosystem in Maryland for 35 years. Entrepreneur, startup, ran some funds, ran TEDCO for a couple years, and now I'm with Evergreen. So on the panel here, we've got some really fascinating and diverse group, and I mean that in a lot of ways. We have funds that do specialty things from a social impact perspective. We have funds that do specialty things from a rare find perspective. We have funds that focus geographically in Baltimore. So this is kind of a good example of Baltimore venture capital, to be quite honest with you. So we got a strategic fund. We got a RareBreed fund with my buddy Mac. Deborah has recently started her own venture fund, which is extremely exciting. Chris has been around for a while. I think you know Chris from TCP and Propel, been investing in Baltimore-based businesses for a long time. And Jeff Cherry, everybody knows Jeff, and the great work he's done with Conscious Venture Labs and the new venture fund where he's raising some pretty critical capital. So I'm going to let each one of these people talk a little bit more about themselves and the fund. We don't want to spend too much time on ourselves. We want to generate conversation. But as part of introducing yourself, I'd like to maybe just talk to the audience a little bit about what you're seeing on a macro level from access to capital and venture spending, and probably more importantly, what you're seeing in this region and what, through your own personal experiences, you've seen here, with emphasis on the trouble spots, the areas of concern and the shortfalls that a lot of these people are seeing on a regular basis. So I'm going to start with you, Mac.
How's it going, everybody? My name is Ecphora Edward Conwell II. Most people know me as Mac. If you follow me on Twitter, it's Mac the VC. How you doing? I am a Baltimorean. I am from Baltimore. If anybody asks me what school I went to Woodlawn High School. Thank you very much. I'm a software engineer by trade, two-time founder. Worked at TEDCO for several years where I helped start the Builder Fund, which is the first and only state-backed pre-seed fund for women and minorities in the country. That was fun. And then in 2020, with the help of Twitter, I raised my first venture fund, RareBreed Ventures. We are a pre-seed to seed venture fund investing in companies primarily outside the major tech hubs, so outside of Silicon Valley, New York, and Massachusetts. We'll still invest in those areas opportunistically, but the bulk of our deals come from elsewhere. Our Fund 1 was a $10 million fund. We are currently in the process of raising Fund 2. Target is 40. I'm not currently deploying capital at the moment, so if you got a company you want to pitch me, that's fine. I don't really have a check for you right now, but I might be able to introduce you to some of the fine people up here. What I'm seeing on a macro level. So as everybody's seen, is that there's an economic slowdown, and it's not getting any better, right? There's a whole bunch of talk out there about all this dry powder. Well, the dry powder, all this money that's being out there that needs to be deployed, a lot of that is concentrated in like 8 to 12 funds that are really, really large, and they're not writing checks to folks in this room, right? So in actuality, there's a lot less money out there than we've seen before. The hurdle to raising capital is a lot higher, and the days of grow as fast as you can, buy all your stuff you can off of Facebook ain't working anymore. Now everybody wants to see how quickly can you get to profitability, right? They want to see, like, as you grow your company, where's the exit potential at? And that's going to be from having strong unit economics. So the idea of, like, unit economics can be all kind of crazy as long as you're growing fast. It's not going to be a thing, at least for the next, few years.
Thanks, Mac. Deborah? Oh, before we get back, one quick question. How many investments have you made in the Baltimore area, and why is it so few?
I've made, out of 40, I've made 3. Part of that is when I raised my fund was in the middle of COVID, so like everything was like on Zoom and national. So these events like this where I could meet founders, I wasn't able to go to. That's part of it. The other part is when you think about our ecosystem, or when you think about a lot of these tier 2 ecosystems that are trying to grow and want to have their own version of Silicon Valley, the one thing that these ecosystems tend to lack is more than just capital, it's talent, and talent willing to come to where you are, but then also like mentors, right? Like if you're building a SaaS company and you want to talk to somebody who's been an exited entrepreneur from a SaaS company, there's a couple in Baltimore you can talk to. But if you're in San Francisco, there's like, you can literally walk into like any coffee shop and find somebody who's done that, or who was on an early team at a company who did that, right? And so the ability to gain that knowledge and those skills is so dispersed and few in a city like Baltimore compared to like a city like right now, Miami, right? That makes it harder. Like when you're getting started, you like have these questions like, how do I fix this? Or how do I work through this? There's only so many people locally you can go to for that, right? Now, granted, George is one of the people you can go to. People up here you can go to. Greg in the back, you can go to him. He's ran a couple companies. He's exited, right? But then, like, there's only so much, right? And so, like, things like that you see hold us back. So, yeah.
Thanks, Mike. Thank you. You gracefully got out of the only 3 in Baltimore pretty well there. No, I'm kidding. I'm kidding. Deborah?
All right, well, I'm 7 for 8 in Maryland.
There you go.
There you go.
She's outperforming me.
No, all right, so George said we could have fun, which I think gives me permission to laugh at my own jokes. So, no, I'll try to have fun too. So, my background is in biophysics, so a PhD from the University of Maryland, College Park. Go Terps, if there's any fellow Terps here. Yes, that's right. So I moved into angel investing, and I just naturally started investing in what I know, which is medical devices. And I had the privilege of getting to know companies as an angel investor. And then I moved into running a series of SPVs. So I have some really nice single asset SPVs, and now I'm on Fund 1. So I'm raising as well. So I'm in the brutal fundraising period. How many people out here, we're doing interactive, right?
Absolutely.
How many people out here are actively raising capital, right? Can I see? Yeah. Okay, you guys, I feel your pain, okay? Right. All right, so what's the magic and what's the secret to raising capital? Well, if you're raising capital, you know there is no secret, right? It's brute force, and it's coming to events like this, and it's meeting people, and it's networking, and meeting people, and more people, and more people. And when I say brute force, the amount of force that you put in, I would agree with Mac, has gone up a lot, right? It's gone up a lot. So it is a lot of force, it is a lot of work, but then whenever you get the wins, they're even more exciting because you worked even harder to get there. So that's why I'd say, there is silver lining in that, there is capital still being deployed. And I see an entrepreneur out here who's in the middle of a very successful raise. And so, we are still seeing a lot of wins. But the other good thing is that, we are seeing the companies themselves being a lot more robust and being a lot stronger because you have to be in a really strong position to raise now. So, there's a bright side.
That's great, Deb. Could you give a quick definition of an SPV to the crowd?
Yes. So when you're doing angel investing, you have a single angel who's a high net worth individual. They're our accredited investor, and they write a check to a single company. So it's a 1-to-1 ratio. Whenever you have an SPV, So I have a series of single asset SPVs. That means I have one investment vehicle and I have a group of investors so it's a group of investors who've come in and written a check, and it's a single check that goes to one company. And then whenever you have a venture fund, you have a group of investors who comes together and invest in a group of companies. So is that pretty good?
And just to let everybody know, SPV means special purpose vehicle.
Thank you. Okay.
That's what I was going to say.
Thank you.
We're going to pull that out of you, Deborah.
Guys, they all talk in acronyms. And we say, explain that acronym. They tell you the acronym again. I'm like, no. I want to know what that means.
SPV, special purpose vehicle. So.
Thanks, Deborah. Well, I'm Chris College with the Propel Baltimore Funds. We've been investing in companies that will headquarter in Baltimore City for 10 years now. We're on our third fund. That fund had its first close in July, and it's a $20 million fund. We've got $17 million of dry powder to deploy into companies right now, but those companies have to headquarter in Baltimore City after we invest in them. And what else should I tell you about us?
You can just stop there. That's pretty awesome.
Okay, I'll stop there.
Hi, everyone. My name is Jeff Cherry. I run a accelerator, which is what I started first 10 years ago, called the Conscious Venture Lab. And then about 4 or 5 years into that, we started a venture capital company, Conscious Venture Partners. We raised a small sort of proof of concept fund in 2018. It was $2 million, which we've all deployed. It's doing well. And then in 2021, we launched our second fund, CV Fund 2, which we're targeting $50 million. We've got about 18 under management right now. We are deploying capital. We generally invest, not always, but generally, in companies that come through our accelerator because we have a very specific idea about what makes companies successful, this idea of stakeholder or conscious capitalism. I was involved in that movement very, very early on. I was a consultant on 2 books, a book called Firms of Endearment, another book called Conscious Capitalism that was written with John Mackey from Whole Foods, where we lay out the sort of the business model or the thesis of how do you run a stakeholder-focused business. We think that those businesses are simply better managed. So we spend a lot of time talking to entrepreneurs that we work with that are scattered around the room tonight about how to do that better. And that's, even if we invest outside of the accelerator, we require that the companies that we invest in, unless we've known them for a very long time, we already get their management style, we require them to go through a little boot camp that we run. So that's sort of our way of thinking about the world. We are generally agnostic. We invest in pretty much anything with a lens that says we're looking for ideas that are breaking down barriers to access in some way, shape, or form. I guess I'm probably a hybrid between Mac and Chris. We don't only invest in Maryland and Baltimore. We always say that we'll invest in anyone, no matter where they come from and no matter what they look like. Lots of people will say that, but it's usually a racist dog whistle. We actually get out and do the work, get into communities to find those entrepreneurs that other people are ignoring for all the wrong reasons. 2 things. The one thing I would say, I think I disagree with you a little bit about the brute force. I'm going to piggyback on something that Max said. So if I'm not the oldest, I'm pretty close to the oldest up here. And when I started my first company in 1986, that we went from 2 people to 200 people, from 0 to about $20 million. There was no such thing as venture capital. Venture capital was a new customer. So I say that fundraising on the company side is really not there. The secret sauce is customers, and customers that are profitable. So if you can, I'll finish and give it to you. If you can, I mean, that's really what we're looking for. Do you have customer traction? Have you figured out who wants to buy this thing? Is it an ideal, is it a solution looking for a problem, or is it a real problem that lots of people have and are willing to pay for? So I think that's the key on the company side. I can tell you, on our side, raising capital, it's at least as hard, if not harder. because of all the headwinds and macroeconomics, and we see capital on the sidelines. Even here in Baltimore, there's a lot of money in Baltimore, a lot of family offices, foundations, institutions, and it's hard to get them to part with that money right now. So one of the things that we're finding from a macro perspective, George, is that we're finding more ideas than I think that we can fund, because we also are looking for where are they located, are they black and brown founders, those sorts of things. But I think we're finding if we had more money, I think we could put more money to work. So I'll leave it there. I think Chris wanted.
Thanks, Joe.
George, I was going to answer that one question as well. And I think in this tougher economic environment, I would say that using some intelligence in how you pick the investors you're targeting is probably more important than ever before. And I'll give you an example. We get probably 20 inbounds every day, and the ones that are form letters that are from Idaho that are not moving to Baltimore, I don't even have the time to respond to all of those. But if somebody sends me an email and says, hey, we're thinking about moving to Baltimore from Richmond, we saw you had a portfolio company that did this, and we're very much like that in how we grow this and how we look at it, those are the ones that I spend the time to actually try to help, even if we can't invest in them. So I would go the opposite of the brute force right now, and I would go the very diligent, look for the right investor, look for the right match. When I was doing that for a living and helping companies raise money, I helped American Military University raise their first $10 million, and I did it because we found a venture capital partner that went to West Point, was ex-military. He understood the business model. He understood the challenges of the customer, and he put the first $10 million in because he said, I know that problem. Find the investors out there that know your problem or know your industry or know what the struggle is, and you'll have a much higher hit rate of getting people to respond, to talk to you, to interact.
Thanks, Chris. I don't think a week goes by around Baltimore where you don't read somewhere about the frustrations of entrepreneurs trying to raise money in this region, and it's been going on a long time. And I know when I was with TEDCO, I was involved with some studies with the governor's office about that, and the stories always came back about we don't have enough capital, how we get more capital. And I used to always stand up and say, hey, look, capital is actually pretty smart. It finds winners. So how do we produce winners that we can attract more capital, have more exits, create more wealth? It becomes a nice cycle. And we're not doing a real good job of that. We got to do a better job of that. But I was reflecting with a couple young entrepreneurs about the frustrations of raising money in Baltimore and in Maryland. And I said, let me tell you a story. In 1996, I got involved with my first startup. It was during the dot-com that some of you may remember. Most of you probably weren't around then. But it was an exciting era. It was crazy times. We raised maybe $15 million in private funds to get the company going. We were in mobile and wireless technology. We went to the public markets, went public, and raised $120 million in 1999. And in 2000, right before the markets collapsed, we raised over $1.5 billion in a secondary offering. We were based in Owing Mills, Maryland. We quickly built about a $100 million company, and then we broke it up years later. But I tell them that was 20-odd years ago. $1.5 billion, there wasn't one dime of investment from anybody in Maryland. Zero. From an angel, from a fund, from anybody. So you're preaching to the choir. This has been a long run, and we got to try to change it. But that doesn't solve your problem today. It's just letting you know this has been going on way too long. We got to find smarter, better ways to deploy capital, to get entrepreneurs on board to help raise capital. And I think we were talking earlier about mentoring and training and developing and talent. And I had a little example. I was telling Jeff earlier, currently looking at a couple opportunities with the new fund I have, and I have a really strong advisory group. And we were looking at one in particular, and we were kind of on the verge. Great technology. It looks like it's made good process. We're seeing it's in the medical field. And at the end of the conversation, can this individual running it really get it to where it needs to go? We had concerns with that, right? Experience, where they are, the team. And so that was leaning itself to say, well, let's not make this investment. Let's wait and see. And then a bunch of us rallied around late at night with communication about this is the wrong way to go about this. We keep doing this in this area, and this is wrong. we should be asked the question, how as we as a fund, can we add value and help that entrepreneur get there, right? If it's good technology and it can get there, we've got the brain power, we've got experience, we've got a platform that touches nationwide universities. So we need to see that trend start to change a little bit. This area historically, and I think it lends itself to just what Maryland is. It's been heavily GovCon, government sector jobs, employment, and over time it's developed a nature of being risk avoidant and process oriented, right? And compared to other regions around the country. So that takes time to change, but success breeds success. We got to keep trying, we got to keep pushing, but really want to hear from you about things you're seeing or concerns you have or questions you have for us about, how can you do a better job of raising capital? We all have unique funds that do different things and approach different types of products and customers, but we're all in the game and we've all been there and we want to help. So these meetings that Betamore's having is all about trying to hear what you're seeing, what your concerns are, and let's get down into it. Let's really get down into what's going on. So if you guys want to add anything else before that, or we can just kind of start a conversation. Does anybody want to jump in and have a conversation about what you're seeing, what you're doing, what you're worried about? Good for you, Michelle.
We're recording this, so I want you in the mic.
So Jeff, you said something, and I've heard this from a lot of folks. You like to invest in companies that go through your accelerator or that have been through that kind of process. But how do companies, founders, a lot of folks are in the audience, get to that point? What's needed to get to the point where they can be accepted into an accelerator or at least be acknowledged as having enough capacity as if they had gone through an accelerator? I mean, what's missing in our ecosystem to get more of these founders and entrepreneurs to that point?
Well, it's a good question, but I'm not sure that, I don't know, someone else on the panel might have a different opinion of this, but I think there's a lot of programs here. There's the stuff that M&T Bank is doing when Fagan, before he took the new job. There's everything that's happening in Baltimore. There's Upsurge. There's, so there was ETC, which I know is going to change. But I think that there are a lot of, there's all the stuff that's happening at Hopkins. There's accelerators in University of Maryland. So I think there's a lot of programs here. I think there's a lot of sort of training programs here. So I'm not sure that that's the thing that's missing. I'm just not sure. And maybe I'll hear different from that tonight. I will say for us, we started asking ourselves that question a couple of years ago because we were getting 200-300 applicants and we were making investment decisions and we were investing in 5 to 10 companies. And then the other 195 or 90 or 200, 290 companies were just like, see ya. We don't know what to do with them, right? And someone said, we can do better than that because we've got capability, we have knowledge that would be valuable to those companies even if we didn't invest in them. So when COVID hit, it gave us an opportunity to do something about that. We created, with a partner in Annapolis, online learning management system that we're now using in our accelerator. We're in virtual. So instead of taking 5 or 10 companies, we're taking 20 or 30 companies in at a time, and we're putting all of those companies through the program. Now, we're telling them we're going to make investment decisions at the end, but we are still bringing all that capability, all that knowledge to them. We're even thinking now about whether we could make that sort of on your own, so we can make that product available to companies so they can do, self-paced, knowledge if they don't want to go through a program. So I think that there's a lot of programs around. I'm sure there's holes that I'm missing, but that's sort of how I feel about it.
Yeah, I will add, you're right on point, Jeff. And I will also add that in my observations over time of watching the Maryland and Baltimore ecosystem around capital, historically things were really driven here, which is unique, by the public sector. And there wasn't a strong private-public relationship going on in this whole spirit of things. And that evolved into things that deployed capital to entrepreneurs from public funds. I don't use the word negatively, but a TEDCO, an Able Foundation, these things, and they have good cause and they have good purpose and they put a lot of money out, but they're not private. You know, they have guardrails and they have unique requirements to do, and it doesn't necessarily entice traditional venture capital to come into that environment. We're starting to see a change in that now. And one of the biggest changes I see is from the heart of Upsurge. You know, that's funded by private money who's concerned and wants to get more involved and drive this more equity-based funding platform in Baltimore. So that's a really good light, people. That's a really good sign that big money, big family office money, Brown Advisory, Pointfield Partners, et cetera, is putting money into the system to help drive better access for entrepreneurs. So I'm really excited about platforms like that are driving good things.
Say one more thing very quickly. In our program, we've taken companies from a solo founder with nothing but an idea, all the way up to founders that had $500,000 or $600,000 in revenue. So we've taken founders across, and we think that we built a program that can serve founders across that spectrum. We are unlikely to invest in all of them, but from a training standpoint, we think we've created a program that can serve them.
And I'd like to comment on that as well. So I think the question was started, you know, if you have an entrepreneur and an idea, and then how do you move forward with the company? But from my perspective, what I see in the medical device space is that it's the entrepreneur, it's that person, and that person is the limiting factor. So, you know, we do have support. Once you have an entrepreneur and an idea, you know, then there's support to move it forward. But at least that's what I see in the medical device space. We have so much IP out there that we have lots of support, but it's the people. So.
Hi, my name's Emily. From the talent standpoint, I don't know, has there ever been a movement here in the past or a thought to do sort of like a fly-in program, like what they do in Minneapolis? They have a tech fly-in week where essentially they put out feelers to say, hey, tech folks that are living in cities where you can't afford to live anymore, this is a great place to live for all these reasons, and then look at the companies that have already been successful, and it's a huge motivator for new talent to come to a new area. So I don't know, has anything like that been tried here?
There have been some one-off events to do things like that, but nothing like sustainable or regular, outside of maybe be a Baltimore Homecoming.
There's Baltimore Homecoming, but there's also been tech stars. There's been 2 tech stars that brought teams in from all over the country. So there's a little bit of that. I don't think it's the same format. But yeah, there's been some of those types of efforts.
You know, first of all, you know, we have a lot of talent right here. I mean, I don't mean to say we don't when we make these comments, right? Because Baltimore has a tremendous amount of entrepreneurial talent. I think what we're referring to is talent to get it to next levels, experienced talents, mid-management, things that have taken it to a level before. And how do you recruit that type of individual to come to a city like Baltimore? And there's a lot of reasons, but what I've seen where it's been very successful and areas have grown, it's usually been clustered around certain types of technologies or services, right? So you feel comfortable when you go to a region that if the company you're going to fails, there's one next door, there's one up the street, you know? And you see things in this area in the med tech space getting very big. You see it in diagnostics getting very big, cyber security, things like that. So sometimes clustering of opportunities and common threads of thought leadership and technology can help drive talent to an area. We need to do a better job of that in Baltimore. We need to become thought leaders in certain areas that bring communities to us with big events and big stories. Done a lot of that in the cyber world, some in life science. I think this whole story around Equitech and the work Jeff's doing and team is going to recruit a different type of talent that we could really use into the city. So the mix of those things will help drive it. But I don't want to lose sight of the fact we got great talent here. And we have a great platform to support early entrepreneurs. It's getting to that next level is where we seem to fall short, you know, finding that, you know, we get the 2 million raise, but trying to get that 15 or 20 million raise starts to become difficult because that capital isn't here that makes those type of investments, right? Comments, questions? Come on, people.
Good evening, everybody. So my question is, well, it's not really a question.
Hold the mic closer to your mouth.
I really didn't want to do that.
Come on, they want to hear you. They want to hear your question.
Okay, so it's not so much as a question. it's a barrier that I've been finding. As I explained to my couple of people sitting here, my supervisor recently died at work, and I've taken on her role. And in doing that, I've been able to solidify a $1 million contract with the government. The problem that I am facing as an independent entrepreneur is there are a lot of programs that are startups, but they're looking for you to have reached a certain amount of capital. And so what ends up happening is it kinds to lead us to the wayside because we do not have the resources necessary. And I think for people who are really driven, they're not necessarily looking for the money, they're looking for the information, the knowledge to be able to help propel them to the next level.
You're making a great point. And it reflects a little bit what I was saying earlier about risk avoidant culture, right? We have an angel community base here who wants companies to be revenue generating, right? And that's okay, and that's a good thing. And as venture managers, we got to be careful. We're managing somebody else's money, right? So you're managing the money of people who have certain expectations. But the early stage wealth angel investor in this area is very different than an early stage wealth investor in San Francisco, California. You know, where they have bigger pockets, they've created bigger wealth, and where we rate $10,000 or $15,000 checks, they rate $1 million checks. You know, we don't quite have that here yet, but I think you make a very valid point of how do we get more people to buy in at an earlier level, take the risk, and then help propel that business forward. I agree with everything you're saying.
I would also say that if you were able to secure this contract, if you have a signed contract, there are community banks locally that will take that will make that happen for you, right? Even if you don't have the capital. Harbor Bank, for one, M&T has a program. There's a bunch of local, and they have TA or technical assistance programs to help get through those kind of things. If you were going to go through one of the community banks, I would tell you to look at their CDFI, because the CDFI has some unique programs where they can move money around differently from the traditional bank. So there are programs and things to support somebody like the position you're in. They tend to be very different from a lot of the rooms that we're in, per se.
Okay, thank you.
Sense to you?
It does, and it's like, so last week I went to an open house for Goldman Sachs, 10,000 small businesses.
Yeah.
And as I was there, I began to express to the gentleman, and I'm like, well, this is what it is that I do. And we've been able to sustain thus far because of what I do independently. And so it's me taking what I do as an entrepreneur into my workspace that has allowed us to continuously progress. And the issue that I found was because I am an employee, even though I could show that it was through my efforts and my proposal writing that we were able to obtain these contracts, they told me because it was the business's name that there was nothing that they can do. And it becomes really discouraging.
So I want to make sure I understand.
That's the difference between the entrepreneur.
Are you thinking about, I want to take what I do and take it outside of the business I'm in and start my own business because I already think I'm really good at it?
No, so I actually had my own business before I started my job.
Okay.
But because I have a child in college, I need a residual income because there is lack of funding. And, you know, with lack of funds, there's lack of advertisement, lack of being able to join professional associations that kind of put you in those environments where you can meet up with other like-minded people who can help you. So because I have to pay college tuition out of state in Michigan, I had to get a job.
Okay.
Sounds like Baltimore could be doing more for the community. Do some meetups.
Well, you know, in that regard, where do you go? If do you have access? Is there a place to go to figure out who you can go talk to and connect with to try to raise capital? Are you lost in the woods, or are platforms that exist helping you get there? That's a question, broad question to the audience. Yes, sir.
Hello, everyone.
Hello.
Kind of like a statement, not a question. So I'm a Baltimore native. I actually grew up on North Avenue. Didn't have the traditional route, but I'm currently serving as director of finance. In my spare time, I taught kids financial literacy. So hearing her problem, we're going to connect after. I think it goes to show we do need some type of program to filter people who have really great talents and to see, is there a business model we can create? To me, thinking as a consultant, you could be a consultant. All right, there you go. So next is just, how do you put that in your LLC? And then how do you scale your company and decide, okay, I got a kid to put in school, but can I make an extra $300,000? Just a program that can support someone like that, or even me. Like, I would love to think down the road, could I develop something like a financial tool for children, certain ages, so before they leave and go to college, they have that financial skills that they need to learn debits and credits and how cash flow works and preparing for bills, biweekly pay, 401k investment, and learning all those essentials to get them to a point. So if there is a program for this lady, including myself, I'd love to hear about it, either from Baltimore or anyone up there. And do we have some type of process to help work with small people who are not quite getting to the entrepreneurship space, but still need some assistance and guidance to get them to the next level?
So I think this goes maybe to your question, because you have to think about, I'm glad you said I'm a consultant, right? So right away, that should tell you none of us can invest in you, right? Because consulting business is a different model. It's a different business model. It doesn't require venture dollars, right? It requires something else. So I think one of the things we talked about when I first came here, where are the holes in the ecosystem? So that might be a hole, right? Because the only thing that, I was in the consulting business, one thing, everything is driven through customers. You just have to go and get a customer, right? And then you can go to banks, to CDFIs, and so it's a different type of financing. So I do think that in our ecosystem, there probably isn't enough of a focus on how do we help companies like that. It's not me, it's not Mac, it's not any of us up here. We might have the talent and the knowledge to help you, but it's not the money. But I don't think there's anything specifically focused on those types of businesses yet.
Goldman Sachs.
Yeah, Goldman, a little bit, I guess, but I guess.
I think that's a great input, Jeff. And I was just going to say, looking at the audience, and I've met some people, we have a very diverse group here, right? Beyond color and things like that. We have people that are bioengineers, and we have physicists, and we have people who have the entrepreneurial spirit to start their at-home catering business, it just goes across, and that group, some of those groups get very good access to things, right? They're coming out of Hopkins or Maryland. They're biotech. There's tech centers. There's a lot of venture chasing those things and tech things. But these other things, there's not. And where do you go, right? So maybe, I know when we were talking in our Baltimore meetings, we talked about, could we find a safe place to land for that type of entrepreneur to give them advice, counsel, support, direction. I think it'd be extremely valuable, and it's something that is missing. So bingo, maybe there's something Baltimore can tackle that can help with.
George, you remember we did one of these sessions in November, and a few of the entrepreneurs in the audience said that they don't know where to go to find where the resources are, which was kind of an interesting, because you can access everything online. And we know, as you said, Jeff, there are a lot of resources out there, but we heard from a number of the folk, the young entrepreneurs in the audience, that they don't know where to go. And I don't know if that's an experience that the folks in this audience have had.
Yeah, well, Mac just said, there's, and I've heard the word eco map.
Does everybody know about EcoMap? If you don't know, raise your hand. So
Does anybody use it, and is it valuable?
Investor? We're an investor. Yeah, we're both investors in EcoMap.
Okay.
Ecomap.com, and you'll be able to find the TED co-sponsored
Right.
Maryland
Yeah.
Entrepreneurial
Yeah.
Hub.
Well, again, the question is, are you using it?
Maryland
It's great that people put it together. Or are you using it?
So
Anybody out here using
Papa did
EcoMap?
Maryland, Maryland Entrepreneur Hub, and then also new up and coming is what's the Baltimore one, that upsurge? Be More Tech Connect, I think. Yeah, I think it's Be More Tech Connect.
Yeah,
It's
I
all
saw
it's
that
all
too.
EcoMap. It's all Pava's technology. It's just Yeah.
but we've obviously identified a gap, and that was one of the missions.
That's what we heard last month is that,
and we've heard it
yes,
before.
there's that
And it-
resource, but they don't know about it, or they don't actually want to go to a website and navigate
Right.
that way. They want to meet with somebody and make those connections
And
personally.
the other thing I hear a lot from entrepreneurs who are starting cool businesses and services business and technology business. I happen to be working with one who's doing some unique things with an EDI platform. And, how do I find customers? How do I connect? Why don't we eat more what we make in the Baltimore area, right? I'm building something and nobody here is using it, I see these great med devices being deployed and people could really use it in West or East Baltimore. Why aren't we doing more of connecting technology in areas of need, but also just connecting to potential customers because they don't know how to go do that. A lot of us do. We know people. It's a world of being connected, and who knows who. And so we can help with that. And I've done that with some of the people I've worked with. I've just introduced them to a firm that possibly be a customer, and then it's up to them. But connecting, servicing that entrepreneur that maybe isn't building the next cure for cancer, but is building something very valuable in the service business. How do they get started? How do we help them?
Yeah, I completely agree. That's one of the things I was just going to ask, if there's like some sort of mechanism when these larger entities come up with problems in Baltimore that startups or people at the early stage can find out about them.
No.
It's not.
We've been trying to do that in Baltimore for the last decade. It hasn't happened yet. There's a lot of reasons for it. What I would tell you is if you want to work with the larger institutions locally, you got to get good at networking. You got to get good at business development. You got to get good at the cold emails. I mean, like Minibar, which is a $500 million company, has a headquarters in Bethesda. Fila has an international headquarters here in Maryland as well. Like there are large organizations. That's not even Baltimore. It's just like Maryland.
Yeah.
Right. Like these organizations are here, but like them to work with like the small businesses and the startups locally. We've been trying to do that for a long time.
I think another big question is like there's a lot of talk of like how do the entrepreneurs find the investors, but something that's been super helpful for me is like with investors that introduce me to other entrepreneurs that they've invested in that are like maybe one step ahead of my company to learn from them. And I think like in the Baltimore question, you've got these earlier stage companies that maybe just come here, and then those entrepreneurs that are a step ahead of them, they did have to find capital elsewhere, and so they can really help with that advice too. Is there a way to make those introductions or find those people easily?
More founders need to ask that question when they talk to us.
I think he's standing in the back of the room with a blue sweater.
There you go. But no, as an entrepreneur, you should have a set of questions that you're going to ask an investor, and you should have a set of asks. Now, whether or not I say I'm going to do those asks, that's a different thing. But you should always be asking, like, hey, can you introduce me to other investors? Can you introduce me to founders who have been in similar situations or founders a step or two ahead of me? Because, like, me making an introduction to a founder, really easy to do. Me making an introduction to another investor,
Right.
Yeah. And also to go on that, when you get to know your customer, you're building a business, you know your customer inside and out, you know exactly what you're looking for, you know exactly what they want, you just know everything about them. But not everyone approaches investors with that same type of due diligence. But if you can approach your investor and say, hey, this is like inside and out, like I know that you invest in Baltimore, you are have this amazing camp for social impact. And once you get to know them, like in that level, like at the same, what are the needs of your customer, what are the needs of the investor? So you get to know them, and then you can ask a kind of like deep question. But I think just that question itself, like, is awesome. And like for me, like that's the type of founder I want to invest in, who I know.
We are fundraising right now.
good man.
Just so a little bit of guidance for everyone who's fundraising on top of that, because it's a really important thing. Don't, people email me on the side and say, I'm fundraising, can you introduce me to investors? And I say no. They say, I'm fundraising, I went through your LinkedIn, I found these 5 people who invest in the types of company that I am, who've made investments like this before, can you introduce me to them? I said, absolutely.
Did your homework.
I was going to say, I'm a little bit of a hybrid of both of those, which is I'm glad to make introductions to anybody that's going to help a company be successful. But when I'm making introductions to other investors, I want to know something about the company. I want to actually think it's a good recommendation to make and a good fit, because the people I'm introducing them to trust that I have judgment and that I'm making sure it's a good use of their time. So when a company says, hey, can you make an introduction to Jeff Cherry? I said, sure, tell me about your company. And if they tell me they're in Australia and they do four-wheel drive shocks for trucks and there's no people involved, not something I'm introduced to Jeff, but I might say, hey, I know a guy that makes trucks. So spend the time to explain why you want that introduction or what the fit is.
How important is it to build a board when you're starting out a new medical device company? And more specifically, like, how do you choose a board that can help you get through the first seed fundraise and help you, get out the gates?
Yeah, so I'll kick off on that question. So I'd say you should be really strategic about both your board of directors and your board of advisors, because your board of advisors can come around you and, help you and support you in the ways that you might not want to go to your board of directors for. But being really strategic about who you want on both of those boards, and then also spreadsheets. I love data, so maybe not everyone else does this, but I do have a spreadsheet of my board and the traits that I want on my board and then the different characteristics on it. And then you can see, oh, this particular person, what boxes do they check off and what needs are they filling? What needs do I have as a company? So yeah, being very strategic about the boards and people you surround yourself with in general, it's a great idea.
Completely agree. I want to make sure, though, that we're not giving the audience a misperception between some of Deborah's comments and some of the other ones. Lots of things are different in life sciences than everything else in tech.
They really are.
So
Great point.
Almost everything that she says is different than what we've said, but she's right. It's just a different thing. So really hone in on what your business model is and where you're going. In my technology companies, we think that there's a role for a board, and we think there's a role for an advisory board. And, they're very different, and they're at very different stages. And a lot of things that you're getting out of an advisory board, you're either getting credibility, you're getting customer relationships, or the ability to get customers. The board's completely different. I think of the advisory board personally as credibility, good people, introductions, strategy into the industry or strategic insights into the industry. The board of directors is different. The board of directors is usually the investors, it's the financing, it's the other things that are dealing with governance. And that's how I kind of think about segmenting my board of advisors.
Yeah, I agree, Chris. And, med tech and technology companies are a little different. But, be careful. Nobody, an early stage investor looking at an early stage med tech company doesn't get too excited about who's on your board of directors. I'll be very candid with you. It's nice to have a couple good names there. I'm more interested in who's advising you. People from industry, technology, raising capital, things like that. And also your team, too. Who are your key players on your team? You don't want to show up with an org chart with 15 people on it. Who are your key players? How are you going to get there? Are you being capital efficient? Have you raised some and really used non-dilutive funding properly? All those things become much more important than who's on your board of directors. That changes as you grow, right? When you need to raise big capital, then it starts to become important to bring in some good board directors, and they're usually some of your investors.
The one thing I would note, and mind you, I don't invest in bio. I may do a medical device or two, but it's not the space I deal with. But when I worked at Tedco, I did a lot of this. And I would tell you, it's also really important to make sure you have an FDA consultant that you can point to, right? If you're going to be a medical device company and you're going to pitch to an investor, make sure you have an FDA consultant you can point to, that you're working with, right? Because that's going to be your first giant hurdle. Can you get some FDA clearance?
Hi, my name is Travis Feldler. I'm the founder of TechRow.
Shout out to TechStars.
That's right. We're an ed tech company based in New York, but we're doing a TechStars program here. It's been awesome.
Should move here.
Yeah, that's what everyone's saying.
Are you in the current cohort then?
I am, yeah.
Congratulations.
I'm just curious, what are your positions on ed tech? And what's the investor landscape here for ed tech companies that are revenue generating? I'm revenue generating.
Well, I've said this before, so you already know, but I hate ed tech. I do. Baltimore used to be an ed tech hub. It was a thing. It is no longer ed tech hub because a lot of those companies went under. And the thing about ed tech, and I say it to be facetious, it's funny, it's whatever, but here's the problem with ed tech. really, really long sales cycles. And so you find a lot of ed tech companies end up running out of capital before they get enough customers to sustain themselves. So you either got to raise a whole bunch of capital just to last long enough, or you got to be really, really, really solid on your sales cycle and your sales process. And many of the early stage ed tech companies, you just don't see that.
Hold back a little bit more next time.
Nah, sorry.
Yeah. So we've invested in 3 ed tech companies in the last 12 years. All 3 of them went to zero. We lost all our money. Ed tech was a great strength of Baltimore 10 years ago, 15 years ago. Almost all of the major big public companies came out of Baltimore originally. Lots of companies got spun out of those big Baltimore companies. And I think one of the reasons that a lot of people lost a lot of money is that they were solving problems, but they were solving problems that the customer couldn't pay for. And most of the screens that we look for now at EdTech are, okay, who are you selling to? Is it K through 12? Is it higher ed? And do they have a budget? And unfortunately, in the last 6 years, budgets for almost all of the school systems, except for the colleges, have gone down, not up. And they got into a really bad race to the bottom where most of the early stage tech companies started giving away their products for free, hoping that the K-12 schools would pay for them later or get hooked on them. So I would say that it's a tougher environment for ed tech. I think you have to make a case where your customer has budget and you're solving a problem, and that budget has more cost savings. It's not just solving a nice to have. I think I agree with Mac, and Mac's opinion is widely held within the investors because more money has been lost there than anywhere else. There is a great fund that only still does ed tech, and they did raise a nice big $50 million or so fund, New Markets Capital. So you should definitely talk to the New Markets guys. They're right here in Baltimore, and they've been investing in ed tech only for longer than I have, so at least 15 years.
Isn't this, this conversation is extremely disappointing. Very disappointing, and I'll tell you.
Might want you to change your business, though.
And I'll tell you why. You know, the future of our entire society and system is contingent on improving education, and the path there has to include technology. It's the only way we're going to do it. So we got to somehow figure this thing out, right? And we can't let these barriers stop entrepreneurs from driving solutions from a technology perspective. I don't know what you do. Is it a service to the school system, or is it at-home technology?
Our big customers are usually Department of Education.
Okay. And, you know, it just becomes,
send it our way.
From an investor's perspective, it becomes a barrier because of the nuances of dealing with that infrastructure, right? So one or the both have to get fixed because we're falling further behind and we need technology to get back ahead. So I'm a big fan, by the way.
You know, one of the things that might be valuable, I think, and we talk about this a lot because we're all in the same boat. You should know how much I like you because, you know, there's some ed tech that we were investing in, and every time I do, I go home and think, have I lost my mind? What's wrong with me? But it's so compelling because of what George just said. It's so compelling. We need this. But I think that one of the things that could help here is that for the ed tech entrepreneurs to go to the customers and say, you know why this isn't working? Because of you guys. You don't have, you know, you're always crying poor mouth. You take too long to make a decision. We have people that want to back us, but they find it difficult to do. Not because I don't have a good idea, because they think I'm never going to get a customer, right? It might be, you don't have to have it that aggressively, but it might be worth having those discussions because that's part of the thing that's going to solve this. We've got to figure that side of the equation out.
So
We're still investing in ed tech, so.
yeah, I've made investments in ed. I've made investments in ed tech. It's not something I do often, but I am all about customer acquisition. That is my jam. That is what I care about. One thing that I do tell ed tech companies very often they want to go to the district, they want to go to the school, they want to go through the principal. Not enough folks go through the PTA, right? So if you're looking at a particular state, look at the state and find the counties in that state that have the highest incomes, right, and then go to the top performing schools in that county, I guarantee that the PTAs have a significant amount of capital that they can deploy themselves, or they have the ability to do fundraisers to get things into the school that they want. That's a very different sales cycle and an easier lift to get yourself into a school than going directly through principals and through districts. So just
Let me add one final comment, if I may, because this is
I got
a subject
I got a good one too.
that's really on my mind. It's really on my mind, and I'll tell you why. Maryland, recently launched the new initiative in education, right? The Kerwin Commission, billions and billions of dollars going to education, which is great, and we need to do it. I met with Britt Kerwin. I read the plan. He was in my office. Wonderful man, by the way. Very committed to what he's doing. And I read the plan, and you know what I didn't see? Technology anywhere. I didn't see it. I'm going, we have a generation of students coming forward that have to be all about technology. There's changing demographics. They look at things differently. We got to drive technology into this thing. Didn't see it in there. So talk to your legislators. But we need to push technology harder into the educational system.
One of the things I have seen work there, and one of our portfolio companies did it, was when the school systems or the customer couldn't pay for it, they went out and found foundations where George was going to go or Mac was going to go is to the PTA, and they'll fund it for the schools, and then you can get your revenue going that way by getting third parties to fund it, which, as an investor, I don't love it, but you got to do what you got to do.
So here, Clark Langerville, Forecast Strategic Advisors. Here's a targeted question. So you've been through the FDA. They've waved the wand. You've got 2 patents. You've got customers waiting. Where do you pour your business concept through the funnel to get the funding that you need for build out?
Give us more description of what it is.
Thanks, Clark. So Jeff Wolford, I'm the founder of Parallax Enterprises, and I'm a 33-year Air Force veteran. Just retired to come home to make Parallax work. And with my experience in the plane, I flew often, obviously, in a fighter aircraft with a heads-up display. I was able to patent a voice and gesture interactive heads-up display to be used in the operating theater. And with wrong patient, wrong site, wrong procedure, we were able to beta test it in University of Maryland, prove that we can actually make a difference, save lives, and make money. The initial valuation of the company was $12 billion for 10% market share. When I pitched it to Mayo Clinic, they corrected me, and they said it's only worth $9 billion. So with that experience, I know you invest in the person more than you invest in the product, typically, correct? There was only 12 pilot physicians in the entire Department of Defense, of which 3 of us are in Parallax. And so we named our patented product Charm because I wanted to reflect home where I grew up. I was born in Baltimore, and I came back here. And so we're trying to get it to the next level. We did our friends and family, but now it's time to start investing about $2 million to get it to the next level. I've been through the FDA. They said, bring back the final product that has the security, has everything you need.
Sure.
That's where we're at.
Well, yeah, you talk about the MIPS program, that could help tremendously where you are, which gives great guidance in its program. You get through TEDCO and some other organizations. But to answer your question a little more specifically, what I see a lot at this stage of businesses, and I have seen historically, is a light goes off, I got FDA approval. That ain't getting it by itself, right? That's nice. It's a big hurdle you've gotten over. But what I see a lot of lack of is understanding of the full capacity it's going to take to get this to commercial value, right? What's it going to take? Marketing, sales, deployment, quality product, beta testing, the whole thing. I see a lot of shortfalls there, and that's where a lot of money should be going into once you've passed the design concept, is funding those things, and do you understand it? So as an investor, when we come in, you're raising $2 or $3 million, right? How much more is it going to take to get this to a value proposition and an exit? Is it 10 million? Is it 50 million? It's really important to understand because different type of investors will come in at that stage.
I appreciate that. And we don't have final approval because it has to be the product that has to go to market. So it has to have the security, speak with Epic, et cetera.
So
thank you for your service, Jeff, to the country. I guess one of the things as an investor in a medical device, which I'm going to call it a medical device, is that the distribution and the ownership of the customer is usually owned by a very few number of companies that play in the operating room. And those companies are the ones that are going to be your gatekeepers. And unfortunately, I'm not aware, and maybe Deborah can correct me, I'm not aware of any new medical devices that went from idea all the way into the operating room that weren't acquired by one of the big distributors or acquired by one of the big medical device companies. So it's a little bit of a different play, and I think you're maybe thinking about it a little bit differently, where you're trying to build it to the point where one of those companies wants to partner with you or wants to buy it and then take it off your hands. So you really need to be working backwards. You need to go to them today and say, what is it, at what degree are you going to be interested in partnering with us, putting $10 million in, putting $20 million in, and that's just the partnership. And then that gets you 20% in an option to buy it. But you need to work backwards, and working backwards to today and start figuring out who those probably only 5 or 6 companies in the whole world are that are your partners, are your true customers.
Yeah, I'll jump in on that as well. So an exercise that we have all of our potential portfolio companies go through is to talk about who is going to acquire them and discuss the valuations of that potential acquirer's most recent acquisitions. So working backwards from there, then you can, get some type of multiple. Because when you think about it from the investor standpoint, we all look at the bottom line about the risks versus the potential return. So working at it backwards from the exit.
And not to put a more fine point on it, but that's also true on the investor side. You're unlike a tech company, which most of the companies here are. There's only going to be a handful of true professional med device investors in the region. When I say handful, I can think of maybe 8. So you just need to do your homework, find those 8 or 10 that are in this region. There's probably only 15 to 20 in the country that would invest in your type of product early stage. So it's a matter of doing that homework, finding them, building those relationships, and working backwards. But going to the general investor base is not going to be real fruitful for you.
Yeah. One thing I wanted to add, and this is for anybody building anything that's physical. It could be apparel, it could be a medical device, it could be anything. Here in Maryland, we have what's known as the MIPS program, Maryland Industrial Partnerships, where you can basically you pay 10% of whatever it would cost to build your initial prototype, right, up to 100K. So they connect you with a professor within the Maryland system, and you get access to that professor and their students, and they will help you build out this initial physical prototype. So if in the highest it goes is 100K, so you have to put in 10K, they do another 90K worth of work, right? It's a very interesting program. They've done some amazing work. There was even a team back in like 2017 that built a full-scale exoskeleton suit for firefighters, right? And they worked with a professor at the University of Maryland, right? So like you can build really cool stuff through that program where you do have to put up some capital, but it's far less than what it would be for you to build it on your own.
Great advice. How are we doing on time?
So we're time?
We got time, right?
Yeah, we got a little more time.
Yeah, good, good.
Any other questions?
Nope. No. No. Anybody in Maryland can apply for it.
Any other questions or statements? We've heard a few
Or
statements.
pitches.
Or pitches. Okay, there we go. Pitches.
So we heard some good things tonight. We're always learning, and the system's always evolving. And I think there needs to be one big takeaway I have before that, Mac, is to, we need to help circle around that entrepreneur that doesn't fall into these traditional high venture capital arenas because they're building strong businesses for Baltimore for themselves. And how can we help them create and grow and build through, if nothing more, mentoring, advice, and counsel, right? And direction towards places to help find some capital to grow. So that's a really big takeaway that I heard tonight.
So y'all were giving us some really easy questions, softball questions, personal questions. Like, we were here to talk about the holes here in Baltimore. So who saw the article, was it last week, that came out with 5 black entrepreneurs here in Baltimore saying that raising capital in Baltimore for a black entrepreneur is a really difficult thing to do, right? Does anybody have a question around that? Like, does somebody have a hard question for us to answer?
I got a question around it.
Oh, why don't you ask a question, Jeff?
Well, I want to know what you thought about the article, Mac.
As a former black entrepreneur here in Baltimore who wasn't able to raise capital, it's one thing to be an entrepreneur and want to raise capital. It's another thing to be an entrepreneur that's ready to raise capital. Like, just because you have a company doesn't mean you're ready for capital. Doesn't mean you're ready for investment, right? That was something, this is coming from somebody who lived it, right? When I first started my company and was trying to raise capital, I just thought everybody was racist and nobody wanted to talk to me. It took another black VC to pull me to the side, a gentleman by the name of David Hall, who runs the Rise of the Rest Fund in DC, who said, hey, Mac, I like you. I think you're really smart and you got a cool product, but you don't really have enough customers. So what you have is a hobby, not a business. I invest in businesses, not hobbies. And that was like the hardest shit for me to ever hear. I was like, y'all been working on this for 2 years. What you mean it's a hobby? Like, I've put in everything in this. But I had to understand the economics behind what I was trying to pursue. And it truly reframed the way I thought about my business. And so I stopped thinking about raising capital, and I focused all my energy on how do I get as many customers as possible. And you know what the cool part was? Next thing I knew, I had customers, and then people were trying to talk to me like, hey, do you want some money?
See, this is why I like Mac, because like, you know, when they say you're into the courtroom, never ask a question you know the answer to already. Because I knew what Mac was going to say about that. Not exactly, but I knew where he was going to go. That's exactly how I felt about the article. I responded on LinkedIn to it a little bit, but I think that, look, there's 2 things. There is bias in the system. There's no question about it. That actually exists. It happens. And you know how I know that? Because it happens to me every day. 600, 900 meetings you had? Something like that?
Oh, in a 90-day period, I had 1,128 meetings to soft circle my first 3 million.
And so therefore, most of those people said no.
Yes.
Right? And there's a lot of bias in that. There's also a lot of people who say, this is just not for me, Mac. It's just not the type of fund that we invest in. It's not the type of thing we do. It's not what we focus on. All those things are also true, right? So I think that we have to unpack that article to say, you know, is there bias? Yes. That was what happened to every single black, brown founder that doesn't get money? No. Sometimes, I mean, it's, you know, my team has asked me to sort of temper this a little bit, but I'm like, it's not a business. I like you. I like you as a founder. It's not a business. Or maybe it's not a business I know anything about. Maybe it's not, like Chris was saying, maybe it's not a business I care about. Because I'm going to invest. It's not just, here, let me give you a check and go away. We're going to be married for the next 10 years. So I got to care about it. I got to care about you. I got to think it's a real business. I have to do what a lot of founders don't do. They don't put themselves in our shoes. They don't understand the math. Everyone understand the math? Let me tell you the math. If Chris gives me $10 and says, I want you to invest that $10 in 10 companies, and I want my money back eventually. We understand what the market looks like. So what do I want back? 35 or 40 bucks. Okay, great. I give out 10 $1 bills. I expect 9 of those companies to go out of business. So every single one of them has to give me $40 back, has a potential to give me $40. Why? Because I don't know who's going to be the last person standing. So founders don't want to think about it that way. Like George said, I'm investing other people's money. And I have a requirement to them, just as I have a requirement to my founders. So I think all of that stuff comes into this. That doesn't mean there isn't bias. There is bias. But we have to think about it all.
Yeah. So, just wanted to continue off that. Oh, I'm sorry. Just wanted to continue off that. I think that's more so like the young lady's statement over there, like to provide the financial business operations for a person to make it, to get to a point to succeed, is critically important and part of the infrastructure. To come to you to say, hey, I got a business, I know my customer costs, I know my customer acquisition. They either reside in Milwaukee or California and Oregon, and I can project to make this. Some people don't have the resources or skills or the know-how to go through just a functional business plan to present to all of you in each one of your respective industries to grab your attention. And if that resource is missing, then how is it provided?
Yeah, that's one of the holes, right? I think that's what we're talking about.
Exactly. So it's like, how do we solve that problem? Like, I've helped plenty of small businesses try to just incorporate the financial aspects, which is great, which is probably going to be something I'm going to start into the year, but it's still a big problem, especially when it comes to people of color, that it's completely missing, and we have a different type of landscape contrary to the article.
So that's the whole, but also, one, you're coming to events like this, so this is where you start to get some of that. When I started my business in 2010, there were resources out there, nowhere near as abundant as they are today, right? You can Google, a safe note or convertible note, and you'll get articles explaining exactly what it is. The first time somebody told me what a convertible note was, it was Jason Hardabet, because we got accepted in Accelerate Baltimore, and they gave us this convertible note, and it has some really bad terms in it. I had no clue. Jason's like, they got you in? He's like, let me look at that. He was like, this is wrong, this is wrong, this is wrong, don't sign this. And I was like, yo, what are you talking about? But it took me meeting somebody who was willing to take that time with me. Today, if you don't know where to start, you pretty much still start there. But once you get there, boy, if you follow me on Twitter, you will get every resource you need on how to do this. And I will connect, you will see all the people in the space who do what they do. You go in the Medium today, there's like a whole section on just VC stuff, right? Like, you have to have it within you to put in that effort. And like, yes, it's not fair, right? Like, I didn't grow up in a community where people talked about this, right? Like, I know people in middle school talking about startups, and like, their dad's an angel investor. Like, I didn't have that. And so yes, if you don't come from those communities, yes, the hurdle is higher, right? We don't have a great solution for that, but that's why you're in this room today.
Yep.
And that's also why you need to tell other people to be in this room for the next one.
Yeah, I want to add one quick point to that, because Mac, you couldn't be more right. I started my first business in 1986. I was 26 years old. I just graduated college. I knew nothing. Literally, I knew nothing. But I did know this. I know to find the library, and I sat and I read books. I got another job. I was tending bar. I said, I'm just going to figure it out. So I spent, weeks, months educating myself, because it was the only thing to do. I had no other options. I couldn't ask my dad for money. I didn't grow up in one of those communities. So if you wanted to do it, you just had to do it. So I think that both of these things can be true at the same time, right? Yeah. And when someone comes to me and they say, look, I've been trying to figure this out, and here's the things I've been doing, and I still can't quite figure out this one piece, or I don't understand that, I'm going to jump in 100%. But if someone comes to me and says, I just can't find, there's too much data out there. There's too much information. It's too easy to at least get started. There are holes, and we're here to try and figure out how we fill those holes, but it's too easy to at least get started. And if you come to one of us, you come to me and Mac, look, he's true. You follow him on Twitter, if you can't find what you want, it doesn't exist. That's the problem. Right?
That's great. That's great, Jeff. Yeah. Any other inputs? Yeah, we've got some in the back. Great.
My name is Danish Sayed. I'm the co-founder and CTO of Blackhedge. Also part of the Techstars cohort this year.
Welcome.
Thank you. I come from Jacksonville, Florida, right? It's not a very startup-friendly city. Had a horrible experience there where I went to an event which was allegedly an angel group, but realized they only don't do any angel investments, only seed and Series A. But regardless, like they had this high promise of, you know, like helping out young entrepreneurs. And you know, me and my co-founder, we always had this, who's also right here, but we had this like idea that, you know, if we go insert ourselves into a community like Austin or LA or San Francisco, then, you know, we might be a better shot at landing early stage capital. Now, my question to you guys is like, what can Baltimore do for a company like ours, where we are seeking early stage capital, some of our first money in, and what promises do you have for like the next 5-10 years into the exit of our company? And also, why shouldn't, after the program ends, why shouldn't I go to Austin, Texas, or Miami, Florida, or LA?
So I would tell you, if I was you, I would move to Maryland, and then everybody here who's got any signage that says TEDCO, I would be hounding them daily, right? Because they are the largest funder of early stage tech companies in the state of Maryland. By far, they do well over 100 investments every year, right? So early stage, we do early stage fairly well here. Now, when you start getting to like Series A, Series B, that's when you lean on the folks up here for our networks to get you there. But like, folks from Baltimore know this term, Smaltimore, right? If you spend time in this community will support you. I will tell you, again, when I started in 2010, I was the only black guy in any of these rooms, right? And a lot of the folks that you see here helped me. That gentleman back there, Greg Cangelosi, right? Supporter, you know, from Baltimore, all these other stuff. He told me to the side to help me better understand customer acquisition, right? That was really scary for me, right? I had this older white guy who's got a bunch of money. He started Baltimore Angels, and like he said, yeah, you're older, Greg. I'm sorry. You got a lot of gray, brother. I love you, though. You got a lot of gray. I'm starting to get gray, too, so, like, it goes both ways. But, like, for me, that was difficult. That was something that I had to get over. And I started spending more time in these rooms, and the amount of support, the kindness, the caring, like, these folks are my friends. They're the reasons I'm here today. Chris College, I met him when I was an entrepreneur. He sat me down. He talked me through a bunch of stuff. It helped me understand things that I didn't understand, right? So like, if you come here, you get a community. You go to Austin, you're just one of the other tech entrepreneurs in the coffee shop trying to run from meeting to meeting. But here, you actually have people who pour into you as a community in a way that you're not going to get other places.
I have a very strong opinion on this, and I haven't had a strong opinion yet tonight, but this is mine.
Finally, Chris, finally.
That's actually not true. So seed and angel investing for the 40 years that it's been around, and it started here in Baltimore with NEA, was right here, and it was always a local endeavor until the pandemic. Seed investing under that $2 million round of financing, because when I invest in a company, I need to help them grow. I can't help a company in California grow. I can't meet with them often enough. I can't do it. The pandemic made everybody think that you can be a virtual investor and you can be a virtual company, and everybody was feeling very, very flush with cash. All the high net worth individuals were putting money into companies they didn't understand, and angel investing was in a heyday. That's over. The stock market's down 40%. All those people that were writing $100,000 checks to companies because they thought it was a great company, they'd get a logo jacket from the company, it would be cool, they're all gone. They're not making those investments. If you're an early stage company, you got to find your roots, and you got to build a network and build relationships. And for that first $2 million, that first angel, that first seed, that seed plus, wherever you pick your roots, that's the only place you're going to get it from post-pandemic, in my opinion, for the next couple of years. Now, once you get to Series A and you're raising $8 million to $20 million, that becomes a national game again. And then you have to widen your objective lens, and you've got to just find the right fund that can do the right, knows your industry, can make the right introductions, as in the best fund in the whole country for you. And that's what you do for that larger round of financing. But where we're investing in, $500,000, $1 million, $2 million, we can't chase companies in California and Cleveland effectively and support them. And That's my strong opinion. Other people think they can. Other people have been doing it for the last 2 years. We'll see. We'll see how it works out.
I'm a New Yorker, so I came here because of the community first. I stayed here because compared to New York, everything's free. Literally, everything's free. Compared to San Francisco, everything is free. Buy a house, free. Compared to San Francisco, right? Compared to Manhattan, compared to Austin, everything's free. So cost of living, and you're 2 hours from New York, you're half an hour from DC, you're 35 minutes from Philadelphia. So community, cost of living, those are
Well, I'll just add to that. These are great inputs, and it's an individual decision. You came here for a reason. It wasn't because of Baltimore. It was because Techstars was here, right? Maybe it's up to Baltimore to figure out a way to keep you here,
Yes.
right? We need to do a better job of introducing you and concierging you and showing you the pathway through Baltimore. And it's a great lifestyle. It's a great place to live. But at the end of the day, your company, you have to do whatever you have to do for it to be successful. So no, I'm not going to scream at you if you pack up and leave Baltimore. We need a better job of giving you the resources you need to stay here. Because you're going to love it here. We all know that. It's just, can we give you the resources to make you successful?
Kevin, you want?
You need to come to my restaurant. Yeah, we'll do.
I've been told this is the last question, by the way.
Okay. All right. Yes, ma'am.
So I know we've talked about this before, but recently a couple studies have kind of come out where Black founders raised less than 1% of all allocated funds in 2022.
That's not new. That's been the same metric for the last 15 years.
100%. I get it. Yeah, I'm one of those founders that I've raised money against that, and I get it. It's just, I think it's more about going out into the community and talking to people. And one of the biggest things that I've always done, especially with that, to go off of your points, is I think when you do miss with a VC introduction, you ask them to introduce you to other people. But something that's kind of recently that I've kind of seen, especially in the last 2 months since the downturn has kind of happened, I've had some funds almost, they say the thing that you can't say in an email and say they're not investing in underserved founders. And it was really interesting to hear this. And it was weird that an analyst actually called me after and said, hey, Kev, they're really not investing in Black founders right now. And I want to know, how do we get over those issues, especially as VCs yourself? Because, yeah, I run a streaming company. We have contracts with 19 D1 schools, and we've grown incredibly fast, and we have investors, but we've seen more success with angel investors because they write us a check, and they're in for the long haul. Anytime we need money, we just go back and ask for more. But I know that's not something for everyone else, and I think it's a good question that we can answer because there are Black founders in this room and stuff too.
So y'all gonna learn about me, right? Like, I ain't got no reason to mince no words. So I've already said this before. You follow me on Twitter. I've said this on Twitter. That's just going to be a thing, right? They're not going to invest in Black founders, underrepresented founders. Like, in times of hardships, during this economic downturn, people go back to what is safe. And what is safe is what they know. So that means a white guy from an Ivy League school is what they know. And to this point, because I've had people call me out on this, one of my LPs literally got an LP update from a well-known VC, and in it, they said they were marking down all the investments they did in underrepresented founders and won't be doing any more in the foreseeable future because of the risk. Because somebody who looks like me or looks like you is considered risky in this asset class. And the only way we change that is wins. If you have enough founders that look like us who were the founding CEO, not just the CEO of Exit, right? But who was the founding CEO, one of the founders who has, and we get multiple billion-dollar exits, then we'll see that change. Until then, this is what it is.
I have another strong opinion there. I think that's just awful what they said to you, and I don't think it's true. And when I say I don't think it's true, I don't think you have to sacrifice return to invest in underrepresented founders. Our whole premise of our fund is that we're going to invest in companies that will headquarter in Baltimore City. After we invest in them, no matter what color, creed, sex they are, they have to headquarter in Baltimore City. But many of our investors, the people that gave us money, think that they are compromising on returns to invest in our fund to do good for Baltimore City. And they have this preconceived notion that because we're doing that, we have to take lower quality companies and get lower returns, which I tell them is absolutely false. But there is this preconceived notion out there, if you're doing ESG, you're taking a lower return as an investor. I don't think it's true, but I think there's been a lot of articles in the last couple weeks that when times get tough, that's what they do. They say, well, you know, I'm not going to go for that lower return. I need my maximum return now that I'm poor.
I think that's really interesting to kind of go off of that, because I think when in Q3, when everything really went crazy last year, that was at the lowest it's ever been, at 0.43% of all funds allocated went towards Black founders. So I agree with that.
Yeah. Shit, we already knew that wasn't true.
Yeah, we knew that wasn't
true. We knew that wasn't true to begin with, right? But you know, as Max says, it is what it is, and you know, look, it's all of us. We all deal with it. I'm dealing with the same thing.
Yeah, and to go off of that as well, it's, you know, it's changing it from the inside out. And I know, like, each of us on this panel, like, has that heart, and it is something that we're all actively looking at. And yeah, just like Mac was saying, doing an amazing job. And until then, you know.
Wrap it up. Well, this is good conversation, and it's so needed. And as I've watched personally in my career, and I was really confronted with it when I was at TEDCO, I was really humbled when those numbers came forward. You know, we weren't tracking those. When I got there, Mac had started some things to try to force fit more investing into the Black community, and was very successful with that. And then we were able to, Mac and Toe, we went down to Annapolis and got our first builder fund money from the state. Still too small. You know, what was the first fund, $1 million or something, or $2 million? And we were asking for $5 million, you know. But I was very humbled by it, and I think it's going to take time and patience to get there. But don't be patient, right? We have to figure this out and do a better job. So look, thank you all for coming, for your input, for what you do in Baltimore, for what you do personally every day. I know how hard it is. All you entrepreneurs, you're in the arena. I know how hard that is. Once you get in it, you'll probably never get out of it because the juice will be there forever. But it'll just always drive you crazy. But we want to find gaps. I think we discovered a couple areas tonight, Greg, to think about with Baltimore, some things we can do. So that was our objective. We're here. Baltimore is here. Come see us. Come talk to us. Take a card. Give us a call, because every person on this panel will return it and talk to you and try to help you.
And
so thanks again.
Please come back February 16th, third Thursdays of every month. February 16th, we're partnering with Associated Builders and Contractors on innovators that are working on programs and product that are being incorporated into the construction industry.
And it'll probably be raining.
It'll
We've had 2 in a row now.
Definitely.
Thanks, everybody.
Thank you.
Feel free to grab a drink. There's plenty of food, and we'll be here till about 7 o'clock.